Advanced Audit and Assurance, September and December 2021. Pass your exam, and this is a question 2. Answer for questions. Okay. Masters to be considered before accepting Flinko as client of the firm and performing the review engagement. Requirements and guidance relevant to accepting and continuing client relationship is contained in SQC1 Quality Control for firms that perform audits and reviews of financial statements and other assurance and related services engagements. The fundamental requirements are that a firm must consider whether the relevant ethical requirements can be complied with, the integrity of client, and whether there is information which will lead it to conclude that the client lacks integrity, and whether the firm has appropriate competence and resources. Ethical issue. In terms of ethics, there are several matters to consider. First, it appears from the communication with the company's managing director that Flinko is encouraging Coleco to accept the review engagement by offering the audit appointment as a reward, assuming that the outcome of loan obligation is successful. This creates a self-interest in that Coleco has a financial interest in accepting Flinko as a client and performing the review engagement in order to secure appointment as the company's auditors. An advocacy threat is also created because Calico has an incentive to promote Flinko to the bank to ensure that the loan will be provided, and this may impact the quality and objectivity of review engagement. Calico should consider whether any safeguards can be implemented to reduce an ethical threat to an acceptable level, for example, using an independent second partner to review the work performed for the review engagement. If safeguards do not reduce the threat to an acceptable level, then the review engagement should not be performed. Finally, the fact that Mary Sunshine, audit manager of Calico, has recently been recruited from Flinko raised ethical threats to the objectivity. The ISBA International Code of Ethics for Professional Accountants states that the self-interest, self-review, and familiarity threats may rise when audit team member has recently served as director, officer, or employee of the client. These threats could arise should Mary Sunshine be part of the audit team, as suggested by Flinko's managing director. The provision of code applies to review engagements as well as audit engagements, therefore applicable to review of the cash flow forecast. Given that Mary Sunshine had previously worked in internal audit at Flinko, the self-review threat could arise should she be included in the review engagement team, as she may lack the necessary professional skepticism to challenge the forecast prepared by Flinko. However, given that Mary was part of internal audit at Flinko, she would not have been in the position to exert influence over the financial statements, so the risk is reduced. However, she may also have close personal relationships with the staff at Flinko, making it likely that she would want to secure a favorable outcome for loan obligation, impacting on her objectivity. These threats to objectivity may appear significant, but they can be reduced to an acceptable level by ensuring that Mary is not included in the review team, and should Mary become audit provider to Flinko, ensuring that she's not involved with the audit this year. Next, client integrity. One issue relating to client integrity is the incentive which has been offered for Calico to become audit provider. Should the loan application be successful? In relation to client integrity, ISQC1 suggests that the firm should consider the reasons for the proposed appointment of the firm and non-reappointment of the previous firm as a matter relating to client integrity. In this case, the fact that the latest auditor's report contained a material uncertainty related to the going concern section and the comments by Mary Sunshine indicates that Flinco has financial problems. In particular, it appears that liquidity issues are creating doubts over going concern. Therefore, management of Flinco may be reluctant to appoint their existing audit firm to provide the review service on the basis that the audit firm may not be likely to support the obligation. Related to this, Calico should carefully consider the going concern issue as it creates the high risk for the review engagement. The firm could become exposed to liability issues should the bank provide the loan, the Flinco not be able to repay the amount advanced. For this reason, it could be that the existing audit firm has been approached to provide the review engagement but has declined the engagement, the assignment. Competence and resources. There seems no reason why Calico would not have the competence to carry out the assignment to review the cash flow forecast. Being a firm of chartered certified accountants and performing a range of assurance services means that the firm has the relevant knowledge and experience to perform a high-quality review of cash flow forecasts for business, which does not appear to be a very complex organization. However, as discussed above, this is high-risk engagement due to going concern problems of Flinco. Should the work be performed, it is likely that Calico would want to include experienced and senior staff in the review engagement team in order to reduce risk exposed. It may be that such staff are not available at this time. Resourcing could be a problem, given that Flinco expects the loan obligation to be submitted on 5th August 2025, which is just over a month from now. Calico may not have capacity to provide staff to carry out the review engagement, and the tight deadline could impact the quality of the work performed. Calico should discuss with Flinco whether there is any flexibility regarding deadline, with the objectivity of having longer to plan and carry out the work required. Matters specific to ISAE are 3,400. The examination of prospective financial information. Calico should could also consider matter outlined in ISAE 3,400. We suggest that being accepting an engagement to examine prospective financial information, the auditor may consider, amongst other things, the intended use of information, whether information will be for general or limited distribution, nature of assumptions, that is, whether they best estimate or hypothetical assumptions, elements to be included in the information, and the period covered by the information. Review engagement can vary in terms of the level of work which is required. depending on the level of assurance which is required from the review. The level of assurance required will impact on the scales of the assignment. Calico should clarify the expected form and content and expected wording of the review report, and who will be using the review report so they understand the risk exposure for the firm. ASAE 3400 also contains a requirement that auditors should not accept or should withdrawn from an engagement when the assumptions are clearly unrealistic or when the auditor believes that the prospective financial information would be inappropriate for its intended use. The above matters should be discussed with Flinko as soon as possible to help Calico to establish whether to proceed with the engagement.